This is the FlipNerd.com Expert Real Estate Investing Show, the show for real estate investors, whether you're a veteran or brand new. I'm your host, Mike Hambright, and each week I bring you a new expert guest that will share their knowledge and lessons with you. If you're excited about real estate investing, believe in personal responsibility, and taking control of your life and financial destiny, you're in the right place. This is episode number 431, and my guest today is Dr. David Phelps. David is a good friend, someone I have a great deal of respect for, and really a voice of inspiration for real estate investors and entrepreneurs, truthfully worldwide. He's right here in my backyard, by the way, too, in the Dallas-Fort Worth market. There's a shift coming in the real estate market. Now, I'm not saying that there's going to be a crash, but there have always and will always be market cycles. Truthfully, there's more opportunity in down markets than in up markets if you plan ahead and prepare. Today, we talk really all about preparing for that market shift and the importance of surrounding yourself with the right people in your business. We also talk about how to stay principled in your business so you can thrive in both up and down markets. David is a wealth of information, great guy, has a lot to share. Ready to get started? Please help me welcome Dr. David Phelps to the show. Hey, David, welcome to the show.
Mike, hey, it's good to be back. Always love talking to you.
Yeah, we were just talking for a little bit there. I mean, I think the world of you. You're such a great guy and so inspirational. And we live in the same general market, but lots of travel, everybody's busy, and we don't see each other much. We kind of just joke that we actually see each other more on podcasts and social media than we do anything else. So anyway,
we have our people talk to each other so we can schedule a time to meet.
That's right. That's right.
That's what it takes. That's what we got to do, you know?
Yeah. So awesome. Well, hey man, I'm excited to talk about this topic today because there's starting to be some buzz in the air about a market shift and, you know, without being like Chicken Little here, what you and I know, because we've been through some cycles, is there's always opportunity in a down cycle. In fact, there's more opportunity for us generally in a down cycle with real estate investing if you prepare for it, right? So yes. We're going to talk about some of that today, and I think a lot of people think very highly of you in terms of just the wisdom of how to think about market cycles and how to plan your business around this. Truthfully, we're doing all this for lifestyle reasons anyway, right? So how to not get too carried away. But before we kind of dive in, tell us a little bit about your background for those of you that don't know you yet.
Yeah, so a lot of people know me as a former or recovering dentist. I chuckle about that a little bit because when I say recovering, well, yeah, I was a practicing dentist for many years, and it was my key goal profession when I was a kid. My father was a physician, so I decided the lifestyle of a dentist was better than a surgeon who was on call all the time. So I figured that out pretty quickly. But what people don't know about me, Mike, is that I actually was a real estate investor before I became a dentist. And it's not that I had to make a choice. It's just when I was in starting 4 years of dental school right here in Dallas, where you and I are both from, I'd read some books about investing money, of which I had none. I had student loan debt, but I still knew someday I'd have some money. I'd need to learn how to invest. So I read books on the stock market, and I read a few books on real estate. Now, back then, in those days, unbeknownst to a lot of people, Mike, there was not a thing called the internet. Right. There was no Facebook forums or communities. There was no Kiyosaki or Robert Allen's running around the country. No, literally, it's before that time. Yep. Prehistoric times, actually. And we had these things called library cards. You actually kept it. It's kind of like a credit card, but they weren't plastic. They were actually paper, and they had a little.
I remember those.
Yeah, remember? And they had a little metal plate on them. And you would go to these brick and mortar buildings in most decent sized communities, and they were called a library. And you would go in and actually. It would have these shelves of books, kind of like behind me. I mean, that's kind of a library. It's called books, and you would go and you would present your card, and then you would check out a book, and they'd let you have it on loan for like 2 weeks, and you go read the book, and then you take it back. So that's how I did it.
And it was all essentially the honor system, even, right?
Pretty much. I mean,
Imagine that.
I don't know if they had really like cops, library cops that would chase you down or, put a lien on your property if you didn't take the book back. I was always good about taking it back eventually, but yeah, it was kind of on the honor system. You had to be like a real person and to get a card, that kind of thing. But being a little facetious, but the truth is, yeah, I read books about both stock market, financial products, right? Which is the traditional investing retirement plan. Wall Street sets all that up. I'm not going to bash that. I'm just saying it is what it is, right? And I read books on the stock market, which back then, one of the key books In fact, I had it I was doing a talk the other day, and I had it. I was in my stack over here. I don't know if I still got it, but it was a book by an author named William Nickerson. Still get that book. In fact, I've got one with his autograph in it. So William Nickerson was one of the pioneers that wrote books about investing in real estate. And as I thumb through that book today, 40 some years later, it's still very relevant. Still very relevant. The key core concepts of why investing in a tangible asset like real estate makes a lot of sense, and the different ways you can add value, and the whole nine yards. So I read the two kinds of books, real estate, stock market, and real estate made all the sense in the world. So I told my dad, hey, I'm going to be living in Dallas, Texas for 4 years, going to school. I can either pay rent, or because I would do that, or I said that the key word was we could invest in real estate. So, because I had no money. Obviously, I needed some access to some kind of capital, right? Because I couldn't go sign a loan or that kind of thing. I didn't know anything about creative financing back then. It was just real estate makes sense. So Dad trusts me, believe me. Flew down to Dallas. We spent a couple weekends with a realtor. Did one thing right that I read about in the book, and that is buy worst house in a good location, right? Worst house and fundamentally, that worked. Bought a structurally sound house in East Dallas on the M streets. You know what I'm talking about. Yep. And that house we bought back then in 1980 for $83,500. Interest rate back then, Mike, was 16.5%. Yeah. So people go, how could you make money with that? Well, everything balances. It all balances. I'll just say that. We long story short, I managed. Dad put up the money in the credit, and we split a little over $50,000 in capital gain profit after holding that property 4 years.
Wow.
Beginner's luck? Oh, maybe a little. I mean, hitting a market cycle right and that kind of thing. But what it told me was this, Mike. I waited tables all the way through college and dental school and made pretty good money. I worked at some pretty good restaurants, made some pretty good money. And when I figured out my dollar per hour working at the restaurants, it was a little over $20 per hour, with the tips, obviously the tips.
Right.
And when I figured out what my hourly was on my capital gain profit of managing this property for 4 years, my hourly net was about $260 per hour.
If you're an active real estate investor already doing deals and looking to double or triple your business, you should consider joining the Investor Fuel Real Estate Investor Mastermind. We're a small group of investors that share our best practices, tips, and tricks with one another in an effort to all win. We limit our membership to only 1 to 2 members per market, so everyone shares their knowledge, tips, and tricks openly and honestly. Our members include some buying 1 to 2 houses a month, up to some of the most respected investors and leaders in the real estate investing industry, some of which have personally done over 1,000 deals. If you'd like to be considered for our invitation-only world-class mastermind, please visit investorfuel.com to request your personal invitation. Our next meeting is coming up quickly. Go to investorfuel.com now to learn more. Right.
And when I figured out what my hourly was on my capital gain profit of managing this property for 4 years, my hourly net was about $260 per hour. That's a tenfold increase. And that struck me. It's like, wait a minute here. Pretty good waiting tables, made some good money, flexible hours, good stuff as a student, but 10 times that with a capital asset? Hello. And so obviously I never looked back, meaning I graduated school. I took my 25 grand plus, a little bit plus, and I went and I re-leveraged that into more properties. Again, I had to leverage because that's all I had. And I knew the power of leveraging. So I had to buy, a lot of subject to stuff, which is something we could do a lot of back then because there was no due on sale. So I went to town.
Right.
My 20, I parlayed that in to over about two and a half years. By 1985, I had approximately 13, 14 properties, and then parlayed that further into a total of about 35 properties. And because I did have a business, a profession with cash flow, I took the extra cash flow and amortized or pounded down, snowballed down those mortgages on those properties. So in 15 years, I had about $15,000 per month of, I say, quote, passive. I was managing, but these were good properties. Yeah. Quote, passive. You know what I'm saying? It's not totally passive.
Never as passive as...
Never totally passive. But here's the thing. That $15,000 that was coming in from these properties that I managed with a few hours on the side was equivalent of what I was taking home out of the darn dental practice, where I was going there 4+ days a week, working 10 hours a day, taking call on the weekend, having all the risk factors, dealing with staff and patients and insurance. And I'm thinking, my gosh, what the trade-off here, and I did the real estate really on the side. Now, I put time in there, no question about it. I put time, but I'm thinking, I built up all this equity and cash flow in real estate during the same time in the practice. Now the practice had a value to it, but my real estate, Mike, my equity in real estate was starting to exponentially grow like this on a curve. I'm showing you a curve right now.
Right.
And the practice where I had grown, it was kind of like leveled off here. And the only way to pump that practice is I'd have to expand, bring in more doctors, or do multiple practice locations. And I'm thinking
work more hours, right?
Well, yeah. And the real estate for me at that point was a whole lot easier because, well, one, I had studied it. One, I had gotten into the game. I had learned. Obviously, I had coaches and mentors, which is very important. I still made some mistakes, but never a huge mistake, never a big mistake that would take me down, because I'm involved in that time single family, which I think is really safe if people are getting started. You just can't really blow it with a lot of single family houses. And so I saw my point to freedom. Now, what pushed me over the ledge to say I'm getting out of dental practice was not just an easy decision, but and I won't go into this right now because we talked about it before. My daughter Jenna had a lot of health issues, and the one that really took it to me and made me think really hard about what I was doing in life was when she had to have a liver transplant when she was 12 years old. It almost lost her before with a high risk leukemia, epilepsy. And I was always struggling with trying to be that breadwinner, provider for the family that we all feel, right? But also this lack of having time to spend with my daughter, who at that point I realized, those days could be numbered. Now, she lived, she survived. It wasn't easy. And I'm very, very blessed and grateful that she's with us today. But I'm more grateful that wake-up call hit me then. And I had the ability to let go of a practice, let go of my profession, and have at least a basis of income and wealth in real estate. And I thought, I can survive on this. I can still provide if I don't earn another active dollar in my lifetime. Well, here's the dirty little secret, Mike, is what I realized in hindsight is that once we, as entrepreneurs, business owners, real estate investors, once we can get clarity and focus and quit running on that hamster wheel, which we have to do for a while, we get clarity. And that's where like mastermind groups are just the key, is we get to focus, and the focus allows us to leverage. And so my wealth at that point in time when I left practice was enough that I could leave practice, but it wasn't like substantial. It wasn't like I could live the rest of my life and into quote retirement years. Right. But it grew faster. Why? Because I was able to use the connections I had built, but multiply on those, because now I had time to connect with people that I'd worked with previously, but I never had the time to really leverage in a mutually beneficial way those, and now I could do it and still spend time with my daughter. That was the whole thing. It's like, now I'm living the dream. My daughter's alive. She's doing well. I'm adding to my wealth. I'm having more fun because I don't have to look at the schedule every day and see Mrs. Jones or Mrs. Smith, who I just want to put a bullet through my head. Now I get to choose who I get to work with. It was like nirvana, right? Yeah, but I never knew that, Mike, and I never would have known it had I not been pushed through a difficult, challenging time. I probably would still be through guilt, not because I'd have to, guilt still in my practice because, oh, well, David, how could you quit being a dentist? You put all this time and money into your education. I would be feeling that today. And what I'm telling people, what I'm telling you, Mike, and you know this because that's who you are, because you've gone through the same transition. But if you're not living your dream, when are you? And you've got to sometimes take a little bit of risk, step out and surround yourself with other people who have gone there to help give you a hand up. And when times get a little tough or challenging, or you question yourself because other people point their finger at you and say, what are you doing that for? You're crazy. They got people say, no, you're not. If you really want to live the dream, step up, keep going down the path.
Yeah. Yeah. There's a lot of people that, it's easy to, I went to grad school, which in hindsight, that degree does, I don't say it doesn't help me in my business, but definitely didn't need it. Right. There's plenty of people that are successful in this business that don't have a formal education, college education at all. I'm not saying that I didn't develop some critical thinking and things like that. No doubt. But I didn't go to school for this, right? For real estate investing. And I actually have my grad school reunion down in Austin. It's coming up here in a few months. We're going to go back. Hundreds of my classmates there. I get together with some of them sometimes here. And they just feel, someone might be listening to this, so I don't want to like say anything specific, but just this general feeling is we spent so much time preparing for corporate America that a lot of people have a hard time taking that leap to leave because they're like, well, this is what I trained for.
Right.
And it's like, well, one of the things you also learned in grad school, we went to business school, is the not the concept, but just the concept of a sunk cost. Right?
Yes.
I mean, you made some decisions. That doesn't mean you could never pivot, right? Of course, as an entrepreneur now, I promise you, and you know this too, we spend a lot of time pivoting, right? Just like
every
trying
day.
stuff. That doesn't work. I'm going to go this way. So anyway, I think more of our corporate friends, dentist friends, people that are working for somebody else or have their own business, but largely self-employed, not really necessarily business owners yet, because there's a distinction, have a hard time making that transformation over into, I'm going to bet on me and build something bigger than me here. Right.
It's almost, Mike, like you have to unlearn what we've been indoctrinated into. And again, like you said, there's nothing wrong with higher education at all. But there is a mindset that goes along with it that says this is who you are. This is your path. It's already been determined for you. So just follow the path. Right. And one of my mentors has always told me, he said, David, when in doubt, don't follow the majority, because the majority is usually wrong. So when in doubt, everybody, so you watch, people in society are a lot like lemmings. I mean, seriously, everybody's running over here. They're running over here. They're doing this, doing that. And it's like, whenever you see that, just step back and go, I'm going over here. And, that's usually been pretty darn sound advice.
Yeah. Yeah. So let's talk about one of the things that we were talking about before we started here today, was that this time in the market cycle, I know we're going to maybe talk a little bit about where things are, not necessarily where things are going, but just how to prepare for whatever might come next, whenever it comes, right? But what happens right now is some of the people that are jumping into real estate investing have been thinking about doing this for a long time, and they see the stock market, the real estate market is hot, and there's more people that get in at the top than get in at the bottom, and the best time to get in is at the bottom, right? But there's a lot of people that just have this mindset of it's risky to jump in, and then they jump in at a time like now, when I'm not saying we're at the top of the market. We're definitely not at the bottom, right? So, but they get in and principle goes out the window. They're just like, start making decisions based on just wanting to be successful instead of kind of principled decision-making on what the right investments are. So let's talk about some of those people and maybe try to give them some guidance. Like if you're getting into this market now, which there's nothing wrong with getting into this market now, just how to prepare them for a shift that might happen in the market.
Yeah, well, and there will be a shift. Nobody can say when that will be. Some people have been predicting it for, a little while. I talk about it to my Freedom Founders members. And again, just in preparation, not to take any wind out of the sails. I'm a big fan of, when the opportunity is in front of us, yes, take it. But still, we've got to use principles, criteria of success, or in this case, of investing. And a lot of people that are new to this, coming in for the first time, they don't have any backdrop, no history in knowing what does that mean. How can you get in trouble when it seems like everything sells quickly? You get multiple offers on the market for sale. Right. Everything just keeps going up. Rents go up and prices go up. And when you have no context there, then I think it's easy to get in trouble. So one of the first things I would say is you should be around other people that or use advisors that can be true to you, give you sound advice, whether you work with them, whether you just ask them, to be within your circle of influence, that you can just on a regular basis check in and show a few of your deals, or before you strike the next deal, just run it by some people who have been there and gone through the last downturn and say, hey, am I in any way pushing the margin here? Am I speculating at all? Because see, that's what I see a lot happening. And I know you see it too, Mike, in every asset class, is that people get excited, and we all get excited, right? Because it seems like I just did that deal, bam, knocked that one down, that one went well, and I sold that one, or I put it in my rental portfolio, and it's great. But I want to get another one. And the margins are getting tighter. It's harder to find those deals that we could get, 4, 5, 6 years ago that really had big margins. And so now people start saying, well, I can get by with that. I can get by with this. Even if I have some negative cash flow, hey, it's going up. I'll still sell it in a few months. In fact, I saw somebody the other day, and on a personal basis, not in front of their group at all. I would never do this, but I just went said as a friend. I said, hey, the deal you put out recently about paying 12% on a multiple property acquisition, including multifamily, single family in multiple states. You're going to pay 12%, and your holding period is 24 months. So I'm guessing you think you're getting a value buy, and you're going to flip this portfolio in 24 months and carry interest at 12%. I said, I hope you know that you're getting a really, really super solid discount. And this person didn't even have a clue.
Yeah.
I said, you know what? Don't do it. You don't need that in your life. Stop, because people get crazy. So stay, get in the game. If you're in the game right now, it's a great time to be in the game, but don't let your exuberance or the excitement of the market have you push margins, because that's where we saw a lot of people and same thing back in 2007 and 8. And after the downturn, people that got too excited, ended up with being over leveraged, and they lost, maybe not at all, but they lost a lot, had to recover. It can be tough.
Yeah. Talk about as real estate investors, as business owners, I'm sure you're doing the same thing. I'm constantly investing in, real estate and other deals, obviously, but also just in my business. Like, should I bring on staff? I'm like constantly doing things to figure out how to grow what we're doing at Flip Nerd and our masterminds, all the things we have going on. We're investing in a number of things, right? But you and I both know that the good thing to have going into a down market is cash. We also know as real estate investors, you want to stay as invested as you can, because if you're investing in what you believe in, then it seems silly to sit on cash, but cash is king always in this business, but certainly in a down market. So just talk about that balance of having, because we all know in a down market, basically there's some great opportunities to be had if you have cash or you have access to credit, which a lot of that starts to dry up. But maybe let's talk about kind of preparing for that in terms of the shift.
Yeah, so probably everybody listening to this, has a business, and a lot of people that we're talking to today, have a real estate business, and then probably they're also investing on their own behalf in their own portfolio. Good thing to do: business income, active income, and your investment portfolio. In the business, no matter what business you're in, realize that when we have a downturn, even though your business is running well right now, and let's say you have good profit margin and you've got a good team, and that's good. That's great. Awesome. Good for you. But realize that in a downturn, it's not just us, controlling what we have. We are dependent upon customers that will want to buy our product and or service. And when the market turns down and credit is constrained, the economy can come to a lurching stop almost overnight, where there's no velocity of money. No one's buying anything. No one's investing in anything, because everybody's scared and credit's tight. So everybody's doing this capital call, and kind of hoarding whatever they got, right? Whatever they've got. And so you're right. There's no access to capital. So two things. One, in your own business, make sure that you're able to be flexible or nimble. So I would be careful, even though it seems like it's a great time, and I know a lot of companies are expanding, and that's fine. But look and see how you are expanding. If you're using debt, particularly short-term lines of credit debt to expand, be careful, be cautious. Don't go crazy, because again, you can get caught short in that. If you can do it with cash and expand at a whatever you call a reasonable amount, okay, great, do it. Just don't. I wouldn't lay out some big project right now. I think it could, especially with debt, that could be taking in too much in that regard. You need to have some reserves, cash reserves. It's kind of Dave Ramsey talk. Even on a personal level, you should have some reserves. A 3 or 6 month basis to access cash, or the best way, I think, Mike, is private capital. So institutional credit won't be available when we have a downturn. It shuts off pretty much like it did 10 years ago. But there's always people that have capital they want to invest. Money doesn't go away in a downturn. It just changes hands. It's a transfer of wealth. So if you are building up connections, or you have connections right now with people who have private capital, maybe they have money in retirement plans, or just cash from businesses, and maybe you're already doing business with them. They're investing in some of your deals. Those are very viable connections to continue to build and maintain, because when there is a downturn, those people, their money doesn't go away. I mean, if they're prudent, their money's still there. In fact, the smart ones will say, "Hey, now's the time for us to go to town." So, Mike, if I've been investing with you and we have a downturn, guess who I'm going to be calling up? Mike, I got this money. I've been kind of sitting over here, keeping it kind of liquid. Can I do some deals with you? And you're like, "Amen, brother." Because I've got connections. I know the space here. We can go to town, and that's the time to take advantage of the opportunity. So So keeping some margin in your business, not overexpanding, not over leveraging, being nimble. And then secondly, having access to private capital, those connections that you maybe have or could be building right now, now's the time to get those in place.
Yep. Awesome. And you alluded to this a little bit. We talked about it a little bit about surrounding yourself with the right people, right? So I think a lot of times, specifically even people that have been to medical school or dentists, some of the people that you deal with, or a lot of friends that I know that have higher educations, they're like, well, I've already kind of invested in myself. Like I've been investing in myself the whole time. So, but when it comes to more like personal development or learning the craft of real estate investing, things like that, it's more like informal education, right? It's not at a university per se. But some people are like hung up on like putting a value on that. Like they just say, well, I don't want to invest in myself there. Truthfully, the most I've ever learned in my life has been more informal education and experiences, more so than the formal education, I think. But talk about that kind of issue of surrounding yourself with the right people and staying educated on kind of our craft, right?
Yeah, you said it, personal development. So I think in our formal education, there's always milestones, bars that are set. It can be from, kindergarten, grade school, middle school, high school graduation, and then you go on to whether it's vocational school or college and maybe advanced degrees. So there's always a bar in front that you can go get that higher degree, and there's an endpoint to it. And you get the graduation, you get the certification, you get the license, you get the pats on the back, and there's ceremony. And yes, absolutely, job well done, right? And so I think there's a mindset that says, well, I've gone through that. I've reached the highest I need to reach to do my job, my career, profession, and I'm smart. I'm smart enough that I can figure everything else out pretty much on myself. There are no more formal courses for me to take that I really need to do. So yeah, I'll figure this out for myself. And you're right, Mike, I'm the same as you. I took all the stuff I learned in college and dental school. The experiences were great and the friendships were great. I'll never trade that for anything. But the actual didactic information, oh my gosh, the science, the physiology, the physics, the organic and inorganic chemistry, I'll never use that in my life. Never. Right. So yeah, it's the informal education after you have that formal education that is everything in life. And unfortunately, only a small minority of people get that. The ones who do, they're like us. It's like, I can't get enough of it. I have to hold myself back sometimes because I try to do too much. But that's what moves the needle forward in life, is that informal education that we get, which is a lot about how we think, but then certainly the strategies that we can use that are leverageable that we never are taught in school. It's all outside of school that we learn those things from people that have been there, that understand kind of the real game of life and business.
Yeah. And, for me, the informal side, masterminds, coaching, all those things, another big thing that comes out of there that it's hard to put a dollar value on, and you really don't generally get in formal education unless you go to Harvard or somewhere else, is the relationships.
No.
The opportunities that come up to do things together. I mean, it's not, you can't see that at the face value when it begins, but when you get into it, you're like, wow, this never would have happened if I didn't meet that person. Like I never would have been in on this deal. We found ways to work together. That's pretty amazing, right?
It's what I call the indirect ROI, or return on investment. Yeah. As investors, we're all focused on ROI, right? I mean, that's important. Yes. So if I'm going to go invest in a course or a mastermind or get a mentor that I'm going to pay what seems like a pretty solid investment, so the question is, well, what's my ROI? Well, the ROI is going to be many times, indirect. It's really what you do with it. If you put yourself in the right place with the right people, you never know when you get that ROI, but it's always multiples beyond whatever you invested time or money at that point in time. I always say you only really need one actionable, solid idea to implement from any meeting, experience, mastermind, whatever it is. You need one actionable idea. You'll probably have a whole list, but get focused on like the one or two that are really going to help you move the needle. And many times, Mike, it's being in those mastermind groups where we have all these ideas, because we always have ideas, right? We have ideas galore. It's there where we get clarity because we have the people around us who can see things that we can't see about the opportunities in front of us, but also maybe because we do get off track sometimes. And sometimes it just helps to have someone there who knows us and says, you just mentioned, David, that you could do this, 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 this. and you're telling us you're going to do these two things. So let's talk about those other two. Why are you leaving those off the table? Probably because they weren't like sexy and seem fun. But when you really look at it and analyze it through somebody else's eyes, you go, you're exactly right. That's where I need to go. Thank you so much. And what was that worth?
Right.
Well,
right.
I'll come back in 10 years and tell you, it was probably worth a ton. But at the moment, what do you write the check for? Well, it's going to do something for me, either save me money, save me time, or leverage me into something else that is going to give me still. What we really all want back, is time, Mike. I mean, we do this stuff,
No doubt.
We do crazy stuff, and we go because we're A-type people. And yet time is something we can never buy back. But ultimately, why we do all this stuff is to get time. So many times the ideas we have to have someone else that gets in front of our face and says, wait a minute, David, you just told me yesterday, or you told the group yesterday that you want to spend more time with your wife or more time with your father or more time with your kids, whatever it was. And today, now on your list of action items, you've got da. Hold on. Is that getting what you told us you want yesterday? And I go, oh man, you called me out. Thank you for calling me out. Because you're right. I was heading down the wrong track. Thank you so much for that. Because look, when we get down to, the end, whenever that is for us, and many times people will talk about this, about their regrets in life. And it's never about, doing that one more deal or spending another week, day at the office or, adding another $1,000 or $10,000 or $100,000 to the bank account. It was never it. That was never the regret. The regret always, Mike, is I wish I would have spent more time with the people I cared about. In fact, John McCain just passed away. And in his last book, he mentions his family. He mentions being blessed by the 7 great kids he had. And he says, my one regret is I didn't spend enough time with them. Well, boom. And all the great things he did, great things he did as a war hero, serving the country, served a lot of people. But what he really said at the end was, yeah, that's all good. That's all good. I'm happy I served. But you know what? I wish I would have spent more time with those people. Okay.
Yep. Awesome. Well, David, hey, before we end here, I want to, we both run professional masterminds, and you focus on dentists and doctors and helping people shore up their business there. And then of course we focus on just straight real estate investors usually. Tell us a little bit about Freedom Founders while we're here. I've been to it before. It's a great event. Fantastic. No doubt. It's inspiring. Tell us about it.
Well, because I come from medicine, dentistry, that's who I am. It was for many years. So I know the struggles that, high income people have, professional practice. I know that struggles, high income does not mean freedom. In fact, usually the higher the income, the less freedom.
Yeah.
And so many of my colleagues, they get down the road a few years into practice and they start realizing that this dream, this vision that they had, it's not working out, and they don't see their way off. They don't see the exit ramp. It's like, dang, I'm strapped to this life of earning income, but it's not giving me what I want, freedom and time. And because I'd been through that, because I understand that, and I had to make the same decisions about what was important in my life. And I realized that real estate was really the core of what gave me that freedom. A little bit by luck, but a little bit because I'm always intensely curious. And that's why I found real estate early on, and it worked. It worked well. So my job today is to take those, my people, my colleagues in medicine and dentistry, and connect them to the best people and therefore the best real estate that I can in the marketplace. And that's why I'm a part of many other masterminds. That's why I know people like you, Mike, because we need each other. Capital needs a place to go, and people that are deal makers and entrepreneurs and what I call catalysts out there on the street, lead generating, putting deals together, they need the capital. So I put the two together. I translate between the two. And I have a mastermind where I bring top tier real estate people like you and my doctors, and I teach what I call just-in-time information. They don't need an MBA. They don't need a commercial real estate degree. They need to know enough about deal structure, asset classes, buckets of money, due diligence, and we put that stuff together, and it's probably the most fun I've had in my whole life.
Yeah, that's awesome. I would vouch for Investor Fuel. I do coaching and a whole bunch of other things. Obviously, run our own business. There's nothing I love more than being at Investor Fuel. We just had our meeting here recently. Love it. I just love being around entrepreneurs with a ton of energy that inspire each other and do deals, and everybody's building wealth and winning. So yeah, absolutely. So for Freedom Founders, where do people go if they want to learn more about it?
freedomfounders.com is a good place to go. And I also,
that was what we call a softball.
Nicely done. There's also, I also do a podcast like you do, Mike. It's Dentist Freedom Blueprint Podcast. Now, the cool thing I'll tell people is it's very entrepreneurial. We do not talk about clinical dentistry. I have some very cool people that I bring on. We talk a lot of real estate. We talk a lot about leveraging, about culture, about teams, about delegating. So it's not just for dentists. So, I'm not telling people I can give you an honorary dentist degree if you come on that podcast, but it's not about clinical dentistry. I promise you.
Yeah. Awesome. Well, we'll add links down below in the show notes here for anybody that's watching us on flipnerd.com. And we'll add links for Investor Fuel if anybody's interested in learning about that as well. So, David, thanks for spending time with us today. Great to see you.
So cool, Mike. Always good to see you. Thank you.
Yeah, and I'm excited, David, for those that are listening right now, especially those that are already Investor Fuel members. David's actually going to be our keynote presenter at the upcoming Investor Fuel in November. So excited to have you there, and I know you're going to inspire our room of real estate investors, no doubt.
Can't wait to be there. Thank you, Mike.
Awesome. Everybody, hey, thanks. This was show number 431. We are going to keep them coming at you. If you haven't yet, please go out to iTunes, Stitcher Radio, Google Play, wherever you listen to it at, and give us a positive rating. We'd appreciate the feedback. That's the one thing that fuels us to keep doing hundreds of episodes. I love seeing my friends here. In fact, we just talked about with David that often this is how I see my friends and catch up with a lot of people that I respect is actually doing the podcast. So that's one thing that keeps me going. The other thing is positive reviews and feedback that we're impacting your lives. So if you give us a review, that'd be great. We appreciate it. Everybody have a great day. See you on the next show. If you're an active real estate investor already doing deals and looking to double or triple your business, you should consider joining the Investor Fuel Real Estate Investor Mastermind. We're a small group of investors that share our best practices, tips, and tricks with one another in an effort to all win. Real estate investing can be a lonely business for successful real estate investors, but it doesn't have to be. Investor Fuel members meet 4 times a year, but we talk to each other 365 days a year, and we focus on improving the profitability of our businesses, improving the quality of our lives. That's why we do this, right? And making an impact on those around us so we can truly leave a legacy. We limit our membership to only 1 to 2 members per market, so everyone shares their knowledge, tips, and tricks openly and honestly. Our members include some buying 1 to 2 houses a month, up to some of the most respected investors and leaders in the real estate investing industry, some of which have personally done over 1,000 deals. If you'd like to be considered for our invitation-only world-class mastermind, please visit investorfuel.com to request your personal invitation. Our next meeting is coming up quickly. Go to investorfuel.com now to learn more. Thanks for joining us for this episode of the FlipNerd.com Investing Show. If you're not yet an elite member of FlipNerd, you're missing out. We have tons of great training, including a new detailed master class published each month and live training webinars with experts twice a month. Plus, you'll get access to all of our archives, where we already have a growing library of master classes and other training videos. Elite members also get membership in our incredible online Mastermind group, where many of the top real estate investors from across the country, including many of the hundreds of guests I've had on the show in the past, are already members. Whether you're brand new, looking to get started, or a veteran, you simply must join today. I promise you won't be disappointed. To learn more or join today, please visit flipnerd.com/lab. That's flipnerd.com/lab. See you on the next show.